Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello, friends. Welcome to this episode of Business Line's State of Economy podcast. Indian exports, crucial to keep the country's balance of payments in check, have not been performing well for several months now. In fact, for 6 consecutive months between February and July 2023, there has been a consistent decline compared to exports in the previous year. It is not just petroleum exports hit by low global prices that have gone down, but decline is also across other important sectors such as gems and jewelry, engineering products, and chemicals. With the WTO predicting just a 1.7% increase in world trade in 2023 compared to 2.7% last year, and Russia's war with Ukraine showing no signs of ending, the future may appear a bit uncertain. I have with me today Mr. Arun Garodia, Chairman of the Engineering Export Promotion Council of India, to explain to us what exactly is ailing the export sector and what lies ahead. Exports, as I was just discussing, have been going down for the last few months. Could you just give us a snapshot of what are the factors which you would attribute it to?
The global economy, this has faced huge challenges in the year 2022, including the impact of the war in Ukraine, the cost of living crisis, and the major slowdown in China. These factors really led to slower than expected global growth of 3.2% and a decline in the global trade. The war in Ukraine had a significant impact on our international trade, exposing many vulnerabilities in the global economy and the trading system as such. A new report which was constituted by a Boston Consulting Group predicts that world trade will grow at a rate of just 2.3% per year through the year 2031, which is really less than the projected global economic growth of 2.5% as envisaged. Well, the conflict in Ukraine is a primary force in shifting the trade patterns across the countries, along with the other factors like the decreasing reliance on Western nations, on trade with China, and the rise of economic blocs such as ASEAN. Let me touch the case of engineering sector. Especially it is the metal sector which has been the most significant contributor to the decline. This is the resultant of weakening global demand, and the latest news has indicated that global demand for steel weakened further with slower offtake from China's construction sector, which is under slowdown. At the same time, let me tell you, the excess supply from China has kept strict check on steel prices. We should know that the similar concerns, including the banking crisis in the US, have also affected demand and price of other metals such as copper, aluminium, lead, and zinc, and so on. It is reflecting in India's export performance as well, which indicated a sharp decline in the exports to some of the major economies of the world, wherein they are the trade partners like USA, European Union countries, and China. We expect the situation is further expected to worsen with the implementation of CBAM regulations by the European Union. Then the debt crisis also led to decline in exports to South Asia, India's immediate neighborhood.
Garodia, you just mentioned, how big markets for India, the EU and the US, where the demand and even China's economy is not so well. So going forward, do you see the demand situation somewhat improving in these countries?
Well, let me tell you, for the second quarter of 2023, the UNCTAD nowcast suggests a slowdown in the global trade growth, which is pointing to recently downgraded world economic forecasts and the factors such as continuous inflation, the financial vulnerabilities which are taking place, the war in Ukraine, and geopolitical tensions all across. According to this report, the outlook for global trade in the second half of 2023 is really pessimistic, as negative factors dominate the positive ones. And according to WTO, the volume of world merchandise is expected to grow only by 1.7% this year, following 2.7% growth in the last year, that is 2022.
since demand is low in traditional markets, and because of the particular situation that is existing in those economies, high inflation, do you think that it is time to start diversifying our markets, and how feasible is it to do so?
Well, to thrive in the competitive landscape in the globally which is existing today, trade diversification is very crucial that you mentioned just now. This will help distribute the risk associated with the economic uncertainties and reduces the reliance on only few markets that we are dependent upon today. We are contemplating our country needs to focus more on the emerging markets such as African countries and the Latin America. Let me tell you that India is already negotiating an FTA with the Common Market for Eastern and South Africa, which is called COMESA, which consists of
Mhm.
19 countries in the Eastern and Southern Africa. Similarly, another PTA is getting negotiated with the Southern African Customs Union, which is known as the SACU, which has 5 countries of Southern Africa. And then India is again negotiating bilateral FTA with Mauritius as well. So it is expected that implementation of these FTAs would help in boosting to these regions also. As you know, currently we have 2 preferential trade agreements in place with Mercosur, which consists of Brazil, Colombia, Argentina, Uruguay, and Paraguay, and Chile as well, respectively. The scope of these agreements is quite limited currently and does not encompass most engineering products. We have been requesting government and trying for expansion of these PTAs into free trade agreements, which is of great significance and importance for our country currently.
There are so many various factors which are basically affecting how the world demand is shaping up going forward. Even like engineering goods, you would say, is basically the demand for engineering goods from India would be a factor of all those things that are playing in the global arena.
Yeah, certainly that is going to be.
Mhm. Right. So, you've already talked about the need for diversification of markets, and how new FTAs need to be forged and how PTAs need to be converted into FTAs. But
Right.
what about these big FTAs that India is negotiating with, the EU, the UK, and Canada? To what extent do you think these FTAs can help in, recovering demand?
Okay, I will explain you that. The free trade agreements, which has emerged as a pivotal strategies in enhancing exports, especially from our country. Like we know that 2 recently signed FTAs, one with the UAE and another was in Australia. These agreements have really yielded substantial results, and there has been an upswing in the engineering exports, which has really done very well currently. And we expect that these FTAs are really going to come forward and give us a big rewards in future also. Similarly, the FTAs which are being negotiated at a very advanced stage now, it's the European Union, UK, and Canada. So these are very important markets for engineering products as such. We all know that traditionally we have been exporting to these markets. So once these FTAs are successfully implemented, I'm sure it will definitely help us in big growth of the engineering products we are looking at.
These big FTAs that are being negotiated, that is something really to look forward to.
Exactly, yeah.
Yeah, right. So, we have discussed how, the downturn in the Chinese economy is having an adverse effect on demand and how it is adversely affecting exports. But, there's also another way of looking at it, because Chinese economy is doing badly. So, it may also turn into an opportunity for India in terms of if there are markets that they are vacating. Do you see that happening?
Yes, you are very rightly pointed out that, and we all are looking at that opportunity because the whole world is looking at a China plus one strategy. Wherever we go in the developed countries or even the developing countries, everywhere China plus one chapter is being talked about. So this chapter has become really very vital for India to capitalize on this growth. We need to build up our capacity. We need to look into the foreign markets and get into the globally aiming, spreading out all our supply sources and become important, destination. Everybody should look at India in the future. Even the several major economies, they are committing investments within India because of China One policy. So President of the World Bank, as you know, has envisaged a crucial opening for India for manufacturing jobs by capitalizing on the China plus one strategy. And this opportunity is really, we are looking at spanning at a future trend of say between 3 to 5 years time, where we need to capitalize and start getting into the supply chain network all over the globe, so that alongside China we don't have to depend on Chinese people, and the whole world starts trusting India upon the China plus one policy. And in the essence, let me tell you that the global economy is actively exploring options beyond China, which is very, very vital today.
Russia is another big market which India may look at tapping. And the fact that Russia needs to import from India, more from India, because of if they want to make the rupee payment mechanism successful. Over the last 1 year, we have seen that the increase in exports that we expected has not been happening. Russia is not buying more from India, despite the fact that it would really help it, because it can then use the rupee balance that has been accumulating in its account very positively. So, why do you think that more imports are not taking place to Russia, exports are not taking place to Russia, and how can the situation be changed?
See, it is like this. Government of India, along with Commerce Ministry, Department of Financial Services, along with the Reserve Bank of India, everybody is trying their level best. We have also participated in many meetings jointly. We have met Russian embassy, we have met the Sabar Bank and all that, their chief in India. We are trying to settle this score so that the thing should become very seamless. Because this Russian action in Ukraine, this is spoiling everything. And this trade in settlement in Indian rupees is not really coming up seamlessly, because the banks in India, they are scared of the US sanctions. In case if they accept any documents, then US sanctions might come in upon them. So we have been requesting Reserve Bank of India and Finance Ministry as well to simplify this process somehow or other, so that this time it's very, very crucial to grow the exports. I would like to share something with you. You will see the data of the current year also. That it has really, the exports to Russia has jumped up by almost 200% compared to the last year. So this is a direct result of a Russian demand. They want to import more and more from India, whether in Indian rupee or in the hard currency. So this is a resultant of that.
Right. So you are hopeful that if the banks sort it out amongst themselves, then there is a huge opportunity for exports from India to grow in
And
Russia.
it's really going to be a big growth for India, for Russia, and export for exports from India to Russia.
Right. So you already mentioned about the EU's CBAM, the carbon border adjustment mechanism. So from October, it is transitionally it is coming into place, because I think there would be these reporting requirements, and from 2026 they would be imposing these carbon taxes. So to what extent is the Indian industry prepared for this? Do people know what to do? How to go about giving the required data to the EU, and how do you see this new thing affecting exports?
The CBAM is really a big cause of real worry for the engineering industry, because the engineering industry is directly related to CBAM, the carbon, the footprint,
That's right.
particularly the steel and the aluminum, because they consume a lot of power by way of fossil fuel and things like that. So we are keeping an eye. We are trying to have more sessions on CBAM with the experts and the consultants, so that we see how things are unfolding, and we are likely to getting continuously engaged with the government also to get ready and tackle this hurdle which has been created by EU. And I'm sure the big steel plants today, like the steel, aluminum, and copper, they are all trying to settle the things, how the process has to be adopted and how they are going to shift to their energy needs. Although the energy sector is not going to be calculated for the carbon footprint currently, but sooner or later it might come in. So everybody is trying to focus very much on the carbon footprint on CBAM, and I'm sure some solutions will start forthcoming in next 2 to 3 months' time.
Mr. Garodia, as you highlighted, this time is not the easiest for exporters, be it from any country, and so also from India. So at this time, what kind of help does the community expect from the government?
We have been urging the government to more engaged with the European Union on government-to-government basis. Our aim is to persuade them to rethink the decision that taken regarding the carbon taxes. We are aiming that if they can relieve the pressure on MSMEs in India, that would go to a large extent for developing the things. Maybe more time is given to MSME sector in India so that we can develop more ways and means and do the things properly so that the CBM issue is resolved. And then we believe that India EU FTA, this will definitely bring in the desired results, and we can definitely look at big things. Like on the CBAM, again, the cost involved are substantial. MSMEs may not be able to really digest that much cost from their own kitty. So we have requested government to come forward and help and assist the MSME sector in setting up, the energy audits and the cost for procedural things and all those things. So this backing, particularly from the government for MSME sector, is very, very vital for their survival as well as the growth of the engineering.
Thank you so much, Mr. Garodia, for painting such a clear picture for our listeners, on what is happening to the export sector. So looking forward to having you back.
Thank you.